23% win rate, 3 winners out of 9 trades, and a 3.41% return for the month. Those numbers shouldn't work, but the data says it does. This is my backtest of a simple liquidity strategy for April 2026 on EURUSD. Liquidity sweeps, 1-minute structure shifts, 3R targets, and strict ATR stops. 9 trades, that's it. Let me show you exactly what happened. Let's jump into the chart. So all these yellow lines that you see here are key liquidity zones. The lighter yellow lines that you see down here are equal highs and equal lows. All of these will be available to us as part of our strategy, which is independent of order flow. We're waiting for price to mitigate the nearest liquidity and give a market structure shift in the opposite direction. Once that's confirmed, we'll enter a trade heading into that direction and target the next available liquidity. So the idea here is that we're just doing a liquidity play and creating a mechanical trading strategy that we can employ in real time. Without having too many elements to keep track of, it can be challenging if you're not a full-time trader. But that said, let's jump in. So we are on April 1st of 2026, and I'm going to track these trades in TradeZilla so that we can look at the data after this 1-month period completes. And we are at 7 a.m., which is when our trading window begins. And so as I move price forward, we see that we flirt with London high and eventually take it here. At this point, this dotted yellow line tells us that we've liquidated that available zone of liquidity. And so I'll drop down to the 1-minute here, which this is one of the elements I like with this indicator. It automatically outlines the 1-minute structure, which this is our high and then this is our low. We are bullish on the 1-minute, which makes sense because we had to move up in order to take that liquidity. What we're looking for is price to close below this line here, telling us that sellers are now in control. And so we'll bring price forward to see if we get that shift. We see here that a new high is created and a new trading zone is created. That's fine for us. We just need to make sure that we see the shift before we enter any trades. At this point, because so much time has passed, I'm going to just drop to the 15-minute just to make sure we know where we are in terms of structure. You can see that the indicator has put in the New York high and New York low as well, now that we've entered the New York session through market open at 9:30. But if we drop down to the 1, all we're waiting for is a market structure shift of this key level right here. If that doesn't happen, then we don't have a trade for today. Let's keep playing price forward. It's at this point that we finally get our market structure shift to the downside on the 1-minute. And so for our entry, what I like to do is go to the 15-minute chart and see where our entry could be. Now, off the bat, I can see that price is consolidated here, so there could be a nice order block there. But what I'll do is I'll put our stops at the high, and I'll target this 15-minute fair value gap that's been created. If I go to the 5-minute, we can see that there's a string of fair value gaps right there, which seems favorable. And as part of our strategy, I will just target the next available liquidity that's far enough to enable a 3R setup. So if I want to target the liquidity itself and then adjust my entry if I need to. So there's your 3R. I'll move us in place and then see how this plays out. So fortunately, we don't get tagged in and we're already into Asia session. So at this point, I would remove the trade. So this is our unfilled order, but it's good to see that the logic of the trade made sense. We did end up seeking lower prices and went after these equal lows. So the thesis and the strategy objective makes sense. We just need to find ourselves into a trade. So with that said, let's just move forward and find ourselves on New York morning open the next day. Okay, so New York has started. Now, before New York started, we noticed that we already took London low. Now, I'm either waiting for New York to take London high or take this working low, as I'll call it, and see if we can get the market structure shift to the upside to take the upper liquidity level. So we'll play price forward, see what happens here. And we end up taking London high. So at this point, we'll drop down to a 1-minute, just like before, to see if we can enter a trade. Now, it's interesting here, we did get the market structure shift, but that was before this aggressive move that took London high, which is that yellow dotted line. So we need to make sure that we aren't entering a trade until this gets taken by sellers, because the 1-minute market structure did turn bullish as a result of this aggressive move up. Okay, let's keep playing price forward. And unfortunately, at this point, it's 4 o'clock and I would have shut down my charts for the time as I don't want to enter any trades that late in the day. So no trades on the 2nd day of April here. So we're just going to fast forward to the next day. And here we are on the next day. We get an immediate liquidation of London high here. So we're going to drop down to the 1-minute. So here on the 1-minute, we have a very wide 1-minute range, which expands from this high to this low. Now, I think it'll be too much to wait for this low to get taken as part of our trade setup. So what I will do is turn on a feature that allows us to observe the internal market structure of this price action, which is telling us that our trading zone right now is equally as large. It's spanning from this high to this low. If we can see the dotted lines there, it's a little hard to see, but I can see them there. It's basically showing that we had a break of structure here. And so this would be the lowest point that price went, or creating a new high here. So that's why these become our lines to beat. I'll place this one just so that you can see it a lot clearer on the chart as the yellow line. That is the line we need to see broken to show us that sellers are now in control as part of this internal structure. So we get an aggressive move down, likely the result of 8:30 news. So all the same, the structure has shifted to bearish. And so I'll go to 15-minute because there is still key liquidity to take. What I'll do is I'll put the shorts on here for this point of inflection here, where we took this high. I'll place stops just above these highs here, and I'll target this liquidity, which is previous day low right there. And I'll adjust my entry to enable 3R. Okay, see if price comes back to tag us in. It doesn't, and that's the end of our day. So again, we were right in seeing price move down in the preferred direction. We just didn't get tagged in again. Frankly, these are encouraging to me because it's showing that we are reading price correctly. We just need to get tagged in order to take advantage of it, and that's fine. I'd rather not get tagged in than get tagged in and lose trades because of a faulty thesis. So we're going to fast forward to the next day. Hopefully our luck will change here. We got a pretty wide range here. We have London high and London low as our closest options. See what happens. Okay, we get the take of London high right here. It's a nice wick that results in a bearish movement immediately. So let's see if we can drop to the 1 minute to observe an opportunity to join in on this. We can see that our internal is bullish, right? We've just had a bullish break of structure. Our 1 minute low is down here. We do have a internal low that we can prioritize as well. So let's see which one gets taken first. So we get the take of the internal low. We can see that by this print right there. We have an internal boss right there. And so that is going to count for us. I'm going to drop to 15 minutes, see if we can get an entry. I'll look at this buy and sell candle. I'll put our stops and above these highs. I'll target these equal lows down here. You can see the two yellow lines right there. And that results in a 3.39 trade, which is more than my minimum of a 3R trade. So I'm going to leave that on and let's see what happens. Fortunately, we passed 4 p.m. Eastern, and so I would have to take this trade off as well. Let's see if we just play time forward. It again moves in our direction. We end up getting tagged in and out in London, but it doesn't matter for us. I would have taken the trade off anyway, but it is what it is. At this point, we are into the next day. Our next available high to take is here for liquidity or down here. So let's see what price gives us. So we end up taking that liquidity right here. This London high was taken. We'll drop down for the 1 minute, see what we can observe. In order to take our short, we need to break below this line. All right. So as we approach 4 p.m. and our closing time, we continue just making higher prices. So our thesis doesn't play out here. So we will move on to the next day, turning out to be a wide April here, but let's just see what we end up with. You get much higher prices heading into Asia session. So as New York starts off, we end up taking London high here. We'll try again in terms of seeing if we can get a bearish confirmation, which for us would be either this line right here or the main line here. This is the external 1 minute. We have an internal structure that's also forming. So we'll see which one takes precedence here. So we can see that we have an internal bearish move and confirmation right there. And so that's enough for me to take the trade. So what we'll do is we'll jump to the 15 minute to see if we can find an entry on a trade. I'm just going to put a short on real quick, and then I'll talk you through the logic. But something I failed to include in the previous trades was the inclusion of an ATR. In the bottom right, you can see that I have the 15-minute ATR listed at 107. What I like to do is add that to the current stop, which is placed at the highs I have right here. So 134 plus 107 gives me 241. So that is a location for my stop that is informed by data. I have my take profit in a location that also makes sense at these equal lows. And so I'll adjust my entry now to a 3R setup, which puts my entry right around here. And so that is what we'll do. Now, I failed to do this for the previous couple of orders that we placed, but it wouldn't have mattered since we never got tagged in. In fact, the entries would have been higher. It's because the stop loss would have been higher as a function of the ATR. In any case, we've remembered it for now, and it doesn't fudge our data any. So let's keep that in mind as we move forward. So if that were to be true, then let's see what happens. We get tagged in. We're in drawdown, and we just get wicked out before price goes in our direction. Now this one hurts because it's a wick out, and if we were just a little bit different on the ATR, it would have really helped us, but it is what it is. If anything, it tells me that the ATR was trying to help us out. It didn't quite get us there since we were just wicked out by literally a pip, I think. But it is what it is, so we're just going to move forward. But hopefully the ATR inclusion makes sense to you. Fast forward to the next day. So maybe you can see here we have equal highs. So that counts as an area of liquidity that we can target. We do take that liquidity, and now we're looking for a 1 minute market structure shift. We again have a pretty large range here. We'll see what price gives us. And we can see that we do have an internal break of structure that's confirming lower prices. Now the real move is all the way down here. Now this is a point of discretion. If you feel like this is too great a gap, you don't need to take the trade. For the purposes of our backtest, I will take the trade because we want to be as mechanical as possible. And so because we have a market structure shift, we're going to go back here and place an entry in the same way we just did on the previous opportunity. And that results in a trade that looks like this. The stop is informed by the ATR and our take profit is in an area that makes sense. Now this one's going to end with us getting stopped out, but that is the rules. Again, we get just wicked out, but then price does move aggressively to the bullish side. Okay, so we're going to fast forward to the next day and keep ourselves moving. Okay, as we enter the 7 o'clock hour, our session began. We've already taken London high here, but there is a previous day high that sits right above that red line right there. And so if we can take that, that would be really preferred. And price does end up taking it. So we end up taking it and moving higher, which is fine. We're really just waiting for that 1 minute market structure shift to tell us that we are bearish in a potential direction. So there's the take of the previous day high. So this becomes the line to beat. Play price forward to see what we get. Let's just rewind back a little bit. So we get the confirmation right there with the 1 minute change of character to the downside. Same as before, we'll drop to the 15 minute to identify an entry. So our trade looks something like this. Now you'll notice that we're a little bit more than the 3R trade here, and that's fine because the same principles apply. Our stop loss is informed by the ATR. Our take profits in an area that makes sense, targeting London low. And our entry in this case makes even more sense because it's targeted as 15-minute fair value gap. That's right there. And it's giving me a more than a 3R setup, which works for me. So what we're going to do is set that up and take price out. We get tagged in and start moving in our favor, which is good. Price comes back to entry and immediately gaps down at the beginning of Sunday. Now that's fine for us. This is Forex and we can keep overnight trades. So this actually worked out great for us as our first winner. And just like that, we're back in profit because we had, I think, 3 losses, and this 3+R trade actually puts us back into some profit. So just like that, power of the 3Rs come back for us. Let's play price forward just to start the new day, which is right here. Our targeting London high and London low. We don't get that take, surprisingly, until later. So there's your take of London high. We drop down to the 1 minute to see if we can observe a market structure shift. Looks like the internal range is again very large. It's looking like it's from here all the way down to here. And so we do have an internal structure that's forming, represented by this dotted line. If price can close below that line, then it tells us that sellers may be in control. Let's play price forward to see what happens. Get a higher high, another higher high. So our line to beat actually moves up to this low. This is the lowest point that price came before creating a new higher high. So that's why that becomes our line to beat. Keep an eye on the time as well. Don't want to enter any trades after 4 p.m. Prices ranging on us here a little bit. Create the new higher high and actually takes the 1 minute high right there that we saw from before. And continue to make higher highs. This is now 3 p.m. Eastern. At this point, I probably would step away from the charts since I don't want to enter any trades this late. And for the sake of completion, let's just go to 4 p.m., which is right here. And we don't get the confirmation. Price continues to move up on us, and that's fine. That's why we wait for the confirmation to make sure that we don't get into any trades unnecessarily. Press forward on time here. So London high gets taken before our session begins, so that's fine. What we're going to do is just play price forward and see if we can get any 1 minute market structure shift after the fact, which we actually do here. So let me rewind back to this point. If we go to the 15 minute, what we can see is that there is a key liquidation right here. There's a liquidation of price that results in a 1 minute market structure shift. So for me, that's going to count. And I'm going to place my trade accordingly. Because what it's telling us that even though we took London high all the way back here, there could have been stops in this area. All I needed to do was capture that liquidity and then give our 1 minute market structure shift. So that's the theory there that I'm going to go with. And we're going to set up my trade the same as always, putting my shorts on. And when we do that, we end up with a trade like this. Our stop is informed by the ATR, and we are targeting these equal lows as our take profit. Let's start the trade and see how we end up. We get tagged in. We get a nice reaction, but are basically consolidating around our entry. We get a nice rejection and into a profit here. Let's see if we can keep that momentum. We're into the next day here with Asia. So this would be happening overnight as we are sleeping. Just extend us all the way here, but we are in profit. So that's good news. Let's see if Asia and London can get us to where we need to be. I'm going to jump this to the 1 hour just to speed things up. We're already in the next day's New York session. So I'm not going to stack any orders or anything like that. I'm just going to let this one trade play out. We can see here that the ATR buffer helped us out this time in our favor by not stopping us out prematurely. We're in profit here. To be honest, I probably would go to break even at this point just to protect myself from a loss. But let's see if we can get our take profit. Unfortunately, we don't. We do come back to our break even. So this will be a break even trade for the day. Since we're at the end of our New York timing, we'll move ahead to the next day to see where we end up. So here we are on the next day. We have some key liquidity, previous day low. We have London low and then previous day high here as well. And we'll see which gets tapped first and then target the opposing side liquidity. Okay. So that previous day low gets taken. We'll chop down to the 1 minute to see if we can observe a market structure shift on the 1 minute. This would be the line for buyers to beat now. We're basically just ranging at this point. And as we approach 4 p.m., we do not get our confirmation. So we walk away. You can see that price was basically consolidating for the day. So it may have been a good decision to not trade anything with that type of consolidation. We'll move on to the next day. Puts us right here. I would look for this low liquidity to be taken as an option, which happens right there aggressively. And we even come back for a previous day high right there. So we take 2 key points of liquidity. Let's see if we can get that 1 minute market structure shift to target the opposite side of the market. Price continues to move up on us, which is fine. What we're looking for is a 1 minute structure shift. So now we get an interesting scenario here. We again are dealing with a wide range on the 1 minute. However, we do get a confirmation of a break of structure on the internal 1 minute structure. Like before, I'm going to take that as a signal to enter a short in this case. We'll rewind back to the moment of break structure and jump to the 15 minute and set up our trades in the same way that we've been doing in the past. So that gives us a trade like this. Our stop is informed by the ATR. Take profit is targeting the equal lows down here. Pretty wide range, but it's still early in the day, so I'm not too worried about taking the time to get to my take profit. Let's play price forward, see what we get. Oh, this one hurts because we just missed our entry by a little bit. We can see here that we were off by maybe a couple of pips before price ran in our direction. So again, probably the third time this happened where our theory was right. We were right in our direction, but just didn't get tagged down to take advantage of the move. So maybe April is just shaping to be this type of frustrating month. That's fine. Let's just keep playing price forward. We are approaching the back half of the month. So let's just rewind back a little bit here. You can see that London has been taken right there. On the 1 minute, do we get a 1 minute market structure shift? We're going to have to wait for an internal since this is, again, a very wide range, which happens right there. We get the internal break of structure, which triggers us to go to the 15 minute, put our shorts on, which results in a trade like this. Now, I'm targeting the bottom end of the liquidity and not necessarily stopping at this level because I want to make sure that my entry gets tagged. I've noticed that I missed out on a couple of reading trades here because my entry's been maybe too conservative. I want to be a little bit more aggressive this time while staying true to the strategy of putting my stops in a place that makes sense and then my take profits also in a place that makes sense. Let's see how it turns out for us. We get tagged in, but this time it won't matter. We get stopped out and price wants to go higher. So that's going to be another loss for us. We're going to fast forward to the next day. Okay, so we observe here that New York actually takes previous New York's low right there. You can see the dotted line and barely the wick that takes it. So we're looking to see if we can get a market structure shift to the upside now, which we actually do. So we can see here's the liquidation of previous day's New York low, and then here's the market structure shift confirmation on the 1 minute. So we're going to drop to the 15 minute and see if we can find ourselves trade set up here. In our given method of setting up a trade, lands us here. We have our stops informed by the ETR and take profit. I'm going to target previous day high here, which results in an entry right there for a 3R setup. Let's see what happens. We get tagged in. Price moves in our favor, but then looks like some type of news event occurs after the market open and stops us. Okay, so we're going to keep moving forward to the next day. If you zoom in here, you can see that we're about to take Asia low. So let's see if that actually happens. It does, and price continues moving down. There might be a 1 minute market structure shift in this, so let's see. Not quite. We have a pretty wide range, fortunately, so it's going to make things difficult in terms of observing a shift. Now we make a new lower low, which results in us taking this liquidity, this stacked liquidity right there. We have equal lows right there. So let's see if we can observe a 1 minute market structure shift now. Let's see if there's one in there. Actually, we do. We do get a 1 minute market structure shift right here. And so that means we can be setting up a trade. So I'm going to just rewind us back at the moment of the structure shift and drop us to the 15-minute to put on a long, which results in a trade like this. Now, because my entry is set to 3R, but I'm above price here, I like to set up limit trades. So I'm just going to move it underneath a little bit to maybe a 4R setup. This allows me some breathing room to get tagged in. Now, if you prefer to set up a buy stop in this case, that's up to you. I'm just going to try and see if I can sneak in another R on my trade. We get tagged in and tagged out again. So unfortunately, we are suffering a string of losses here, but that's okay. We're just going to keep moving forward. Like before, one winner can turn everything around. So as long as we're following our strategy setup and our rules, we are doing the right thing. Here we are with New York again. Price has to take the key point of liquidity for us to enter a trade. In this case, it takes upside liquidity right there. Let's see if we can get a 1 minute market structure shift out of there. Nice action. This would be the line to beat here. So let's play price forward. Just like that, we get our break. And we're going to jump to the 15-minute to set up our short this time. We'll follow the process. This is the trade setup that occurs. We're targeting our equal lows down here as our take profit. Let's play price forward. Fortunately, this was one that hurts again because we just missed our entry again by a few ticks or pips here before price went in our direction. And so that is a no-go trade. Now, the other way to think about this is that since we did take the other side of the liquidity, we're testing, we could see if we can enter a trade on the 1 minute again, since we do get a confirmation on the 1 minute that we have another market structure shift here. That's up to you. That's a discretionary move. So we do observe that another 1 minute market structure shift to the upside occurs here after taking the liquidity that we had targeted. So what I'm going to do is I'm going to enter this trade. The logic being that we're just bouncing between liquidity zones. We took this liquidity and it successfully took the opposite side. Now we've taken that liquidity and would in theory target the opposite side of that. And so that's what I'm going to go with here. We're behind in April anyway, so perhaps this is an opportunity for us to make some of that profit back while staying within our rules, right? We're not revenge trading or we're not aggressively trading at this point because we're still going to follow our rules. So when we do that, we end up with a trade like this, where I'll adjust my entry to reflect the 3R setup and we'll play price forward to see what we can get. So unfortunately, we get tagged in during Asia session, which does not count for us. At 4 p.m., I would have taken the trade off. And so that is not going to count in our favor. So no trade here. We'll just move time ahead to the next day. And we can see here that we do take previous day high at the start of New York session. Let's see if we can get a 1 minute market structure shift. I think there will be one in there. Yes, we get a 1 minute market structure shift right here. And so let's put our shorts on again to see what we can find. Okay, when we do that, we end up with a trade like this, where I'm targeting these lows down here. Play price forward. We do get tagged in. We do get tagged in and are in profit. Now we would have left the trade on overnight, even though we'd be in drawdown. So now overnight we gap down, which is great for us. But ultimately going to stop loss here. Which is great for us. Now it's around 5:15 p.m. here at the gap down. So I would move us to break even because I'm still awake at this point. And coming out of all the losses, I want to make sure that I don't suffer anything that I don't need to. And then with that, price does tag us out at break even, which is a great move because we end up going for a full loss. So we save ourselves a loss there. Let's move price forward to New York Open the next day. We're going to take a London pie right here. Let's see. Looks like we might have a market structure shift there on the 1 minute. Now we do have internal shifts right here. And according to our rules, we will take those. Now, if you wanted to wait until price takes these external 1 minute lows, then you can, but I want to stay consistent with our strategy setup here. So I'm going to jump to the 15-minute and set up our trade. It will look something like this. So we'll play price forward. Get tagged in. And we hit take profit during Asia later that evening. So that's a great one. That's a 3.06 bar win for us. All right, so we'll move on to the next day. Okay, so here we are. We have London bottom and London low available to us. We mitigate London low. That might be a market structure shift on the 1 minute. It is. Right here, we can see that we have a market structure shift on the 1 minute. So we'll put our longs on. Our trade will look something like this. Centers field target, London highs here. Okay. London high gets taken. So we're going to employ the same rule as before. Maybe thesis being that if we took this high, we might be looking at targeting the opposite side here. So we just took it. Let's see if we can get a 1 minute market structure shift. Could be one right there. There is. Right here is your market structure shift. So let's go back to the 15 minute to see if we can get into a short. If following the process, our trade would look something like this, where we're going to target current New York low right there. So let's play price forward. Get tagged in. You are officially into overnight trading here with Asia. We get a nice down with London. And now New York is open, so I would move my stops to break even at this point, because at this point I'm awake and I see that we're in profit and I want to protect any of my capital. So I move to break even at this point. But New York gives us a nice move down, doesn't quite hit our take profit yet. And there it goes. So we do get our take profit at 2 p.m. So that's another 3R winner for us. Okay, we're approaching the end of the month, so let's get us there. We just finished Wednesday. We're heading into the 30th, the last day of the month, coming off of 2 wins. So that's a great place to be. New York session begins. We just take previous day's New York high right there. Might have a 1 minute market structure shift following that action. Not quite yet. This is the line to beat. Price forward. And there's your break of that low. We'll rewind back to the moment of the break, go to the 15 minute and see if we can enter a short. With our adjusted setup, our trade looked like this. Let's play price forward. We get tagged in and unfortunately tagged down. So that's the last trade of the month. Unfortunately, it's a loss, but it does take us to the end of the month. And so let's take a look at our results. All right, so here we are on the results page. Our win rate was 33%, which with the 3R setup approach, it is profitable. As we can see, we ended up with 3.41% increase with a $10,000 account. That would translate to $341. So profitable, yes, but not by a great margin. Our profit target is positive. It is above 1, which is favorable. We only had 9 setups, but if you remember, we had about 3 setups that just missed out. So if we had those 3 wins, that could have been an additional 9 par on top of things, which totally changes the narrative here. So something to think about. If you'd like to see me backtest May in the same way, then let me know in the comments. But overall, this equity curve here is very schizophrenic in that it's up and it's down. So you really need to have a strong mental mindset to go through those type of wins and losses. You can see that there was a string of 3 losses here that took us into $300 drawdown. But with proper risk management, this could be a long-term profitable strategy. So 33% win rate and a 3.41 return. The math works because the risk to reward ratio does the heavy lifting. You don't need to be right most of the time. You just need to be right enough and let the 3R risk to reward ratio work in your favor. But here's the thing that this back test exposed for me. The equity curve was brutal. 3 losses in a row. That's $300 down, risking 1% on a 10K account. And the whole month hung on only a handful of trades. That's the psychological test nobody wants to talk about. The question to answer is, can you stay focused and follow your mechanical rules when the drawdowns hit? That's what I'm documenting. The process, not just the numbers. Subscribe if you want to follow the journey. I post my backtesting logs, trade recaps every week. No hype, just the data. And if you'd like to see another video where I break down backtesting, exercise, or a trade recap, then check out this video right here. I'll see you there.